Hello, good morning. Now, today is my second day in Dubai, and I woke up this morning. I was thinking about the difference between here and the market that we have in Lagos, and I realized that there's a difference between developing locations, developing countries, and as well as developed location and developed countries, particularly when it comes to real estate investment. Now, the kind of real estate opportunities, the kind of real estate markets that are here in developed locations and developed countries are entirely different from the kind of real estate markets and real estate opportunities that are available in developing economies, developing countries, and developing locations. So if you are investing here in Dubai and you are investing in Lagos, your target market is different, your objective is different, because the developing phase of each of these two locations differ. And as an investor, you want to understand the market that you are investing. So the tactics, the strategies that you are going to deploy when you are investing in a developed country, in a developed economy, in a developed country, is different when you are investing in a developing location or in a developing city. And looking at what we have here, the market here in Dubai, and the market in Lagos, the market potential, the target market, the population demand, is already obvious for every investor that each of these locations have their strengths and also have their weaknesses. Now, as time goes on, I'll be talking more about the different markets, the different opportunities in developed economies and developed countries like this, and as well as the kind of markets and the kind of trends, kind of strategies that you can also deploy in developing economies and in developing countries like Lagos. So in an earlier video, I talked about places like here, Dubai, which are developed countries, developed cities, fantastic infrastructures, fantastic economic structures, places like Lagos, which are like developing cities and developing locations. Now, the investment principle and the investment tactics that you can deploy as an investor, when I'm talking about an investor this time around, I'm talking about people who want to invest in millions of dollars, $5 million, $10 million, $50 million, and you are considering do I go to the developed countries, the developed cities, or do the high risk, high yield developing locations? Now, this is what I'm going to advise. Now, places like this, places like Dubai, where there are structures, economic structures, regulations, strict regulations, fantastic infrastructures, it makes sense for you to invest here first. Put your $20 million, put your $10 million, put your $15 million here. Get your cash flow, maybe weekly or monthly, or regardless, or depending on how that property is giving you. Then the returns and the interest that you are making from your investment here in this beautiful city, then you can now start putting those returns in the developing cities and developing locations like Lagos. Now, why we are doing that is this. Now, for places like this, for places like Dubai, there are fantastic economic structures here, there are very strict regulations here, so it's almost certain that your investment here, nothing will happen to it. Every plan here have very strict regulations, very strict delivery timelines, very strict requirements, very strict regulations, very strict material qualifications. So 20 years, 50 years, your investment here is assured, secured. Now, you now want to put the returns, the 5%, the 10%, the 15% returns you are making from your investment here, either via cash flow or lease or whatever that you are doing to earn that return. You now want to put those returns into the high risk, high yield developing cities like Lagos. because if you buy a property here and you buy a property in Lagos, maybe you put $5 million into a property here and then you put $5 million into like 3-4 different locations in Lagos. Trust me, in between 6 to 18 months, the appreciation rate you are going to get in Lagos outbeat here comfortably, outbeat here. But again, the risk attached to your investment in Lagos is also far higher than the risk attached to your investment here. You know, you can't buy a property here and then in 6 months or in a few years, the government say they want to build an overhead bridge that will affect your property, or they want to do one road behind your property, or you have a court dispute and everything. So here, your investment is quite assured, quite secured. Or like Lagos, where you can have disputes, regardless of the people that you are buying the property from. Every property in Nigeria is disputable. Even the property that the government are selling, people are disputing it. Not the property that real estate companies are selling. So you want to first of all put that bulk money, that's $15 million, $20 million, $50 million in an assured, secured, structured economy like this. Then the returns that and the profits that you are making now to start compounding. Now, so the objective of compounding is interest making more interest. So you have $10 million or whatever $1 million that you have invested here, you're getting 5% or 15% of that. Then you want to put that 15% into another location, into another investment where you can still be making another 20% or 30% of that 50% too. So it's interest making more interest, returns making more returns for you. So that's the objective of compounding. So that's how to play the game. You want to first have a secured haven, then you now want to start playing the risky game of the high risk, high yield locations. Hope you get it. So if you don't understand this, definitely you can always send me a DM.